Hello, my name is Rachel Lara. I am a realtor here in San Diego, and I am going to be doing this video on the San Diego real estate market mid-year recap because 2021 has been quite an interesting year in real estate, not only in San Diego but all over the nation. It's been very dynamic. There's a lot of information to cover. It's kind of detailed, so I'm going to start with the bottom line of where prices are at and then go into the details. So if you just want that, it's at the front, and then if you want to kind of geek out on the numbers, I will try to make it a little bit interesting, but we just want to get it out. So here we go. We ended the year of 2020 with the median sales price in San Diego County at $745,000. That is for a single family home. And in June, we ended with the median sales price at $879,000. So a pretty big jump if you've been following the market, or even if you haven't, it's been talked about all over the place. Now, we went backwards again. For a condo or attached, the median price as we closed out 2020 was $490,000, and now in June it's $555,000. So if you were a homeowner in San Diego County, most of you in the first part of 2021 had an increase in your equity of over $100,000. It's pretty substantial. I know a lot of times we say that owning a home is your second job in San Diego because the equity sometimes can be like a salary. Now, you will see that it wasn't just higher priced homes. The whole market has shifted, whereas the majority, this shows 2020 versus 2021 price points, and blue is 2020, yellow is 2021. So we can see on this axis it's how many homes sold at that price point, and the bottom is the price points. So you can see the whole market's moved over, and this shows just a year longer. So and one of the other key points from this slide is that we've sold more properties in 2021 by the same point in time as 2020. So by June of 2021, we've sold 2,500 more homes than previous year. So it's not just that there's less houses. So there's a few factors that are going into that. The biggest one is that we just don't have the inventory for as many people that are out there buying. So on this one, it's the same thing. Yellow is 2021, red is 2020 this time, and then we have blue of 2019. And we can see that there are less houses listed in 2021 and more houses sold so far in 2021. Now, this is nationwide, and historically the appreciation is 4%, and that's what this yellow line is. This is obviously not our prices. This is nationwide median because it's at 341,000, whereas we just saw it was substantially higher for ours. But the same precedence goes is that this is like the sustainable appreciation of a house. When it starts to go over that, like we saw in 2002 to 2002 to 2007, where the house prices were above that, then we had that correction. And so when prices go above that again, there's pressure for a correction. Now, here's what our line looks like. So this is the median sales price in June, and we see that 879. This is the last 3 years. This is the blue is detached, the red is attached, and here's our historical median sales price. This one starts in May of 2012 and ends in May of 2021, and you can see that small appreciation and growth, and then we hit January of 2021, and especially in the detached single family homes, you can see that substantial increase. The line's no longer slowly appreciating, it's a big jump. Not as much in the attached condos, because people were needing space because it was COVID and people were moving and taking advantage of the fact that they could have more space, or wanting to do more space. Now, this was done a while ago, and because of different information coming up and then me getting over the fact that I'm doing video, so August just closed out and it's not official yet, but so this is the median sales price for San Diego, and then so we were at the 875 for basically for June and July, and then August, it looks like we're going to close out around 850. So what's substantial, or the trend that we're seeing here, is that correction. We had that strong go up, then we had a flattening out, and then for the first time this year, had the flattening out, and then the next month it went down. So again, this is single family homes, but that is definitely different than the rest of the year, and could be indicating that we are experiencing a slowdown in the market, or at least not as much of a run up. Now, San Diego is a pretty large county, and our sales prices are substantially different depending on where you live. So while the median was 875 or 879 for June, the different areas were substantially different. North County Coastal is this teal, and that median sales price was about 1.5 million. Very different, right, than the 875. And then here we have North County is this orange color from Fallbrook to Escondido and out to Borrego, and that median sales price was 810. North County Inland, which is like Poway, Scripps, Ramona, that price point, median price was 1.2. Coastal South, which is this one right here, which is really La Jolla to Point Loma, that was 1.9 million roughly. And then Metro, which is San Diego, well, Metro is, these I did not make up, these are what the MLS has made up, so I don't always, so the Metro is this magenta color, it's Mission Valley, Linda Vista, Claremont, Serra Mesa area. That median sales price is 910. Metro Uptown, which is Mission Hills, out in North Park, out to San Carlos and Del Cerro. That's this plummy purple color. That median sales price was 949,000. Metro Central, which is downtown San Diego, Bankers Hill, Lincoln Heights, and Encanto, that median sales price was 645. South Bay, which goes from Coronado, National City, Imperial Beach, Chula Vista, that median sales price was 735. East County, which is the mint color, which includes El Cajon, Santee, Lakeside, Spring Valley, and Lemon Grove, that what median sales price was 722. And Inland East, which is the lime color, which goes from Alpine out to Jacumba, that median sales price was $720. And then Inland South, which is the yellow, which is Hamul, Del Zura, all the way out to Tecate and Campo, and that was $845. This is again for July. And then in June, we had some go up and some go down. Most notably, like we'll see that Coastal South went up to 2 million, and then some of them went down, like Inland East went from 670 to 660. So there's a little bit of while it stayed the same as the median for the county, some of those areas changed, and let's say most of them went up a bit. Then we do have the August update, which Coastal South continued to go up, Inland South went down, so you can see that they did change. And then some of them, there's just a big variety, so, and there's not as many, like on the inlands, there's just not as much activity out there, so they tend to fluctuate a little bit more. Now, one of the biggest things that we've heard about, especially when it comes to putting offers, or what everybody's been talking about, is how much over list price that you have to put your offer in at. And I mean, there's definitely stories of people going hundreds of thousands of dollars over and not getting their offer accepted. That on average for the county, it's 105% above list price. So if it was selling for $1 million, I like easy math. If it was listed at $1 million, the accepted offer would have been around $1,050,000. So not substantially higher. Now that is the median, so there were some, but not as many as people heard. I think it's definitely one of those things that people love to share and people are excited, so you hear about it more. But overall, it's definitely more than it's usual. It's usually somewhere around the mid to low 90s. I would say, depending on the market, we've seen it, or mid 90s. And then again, here's that January line where it starts to go not only above the 100%, which is this line here, which it's done once before, right? Or right back here in 2013. Most of the time, it's always below that 100, except for the end of last year, or mid last year is when it started, and then it really increased in this year. Closed sales, here again we're seeing, which kind of repeats what we had shown in the first place, is that we're selling more houses this year. And each month it kind of varies. We usually have how our market starts at the beginning of the year. We start to get a little more inventory and a little more inventory. We kind of peak during the summer. Everybody goes on vacation, sales slow down, and then as we near October, it starts to, people start to come off the market if they didn't sell. So that's this up and down trend over time. But as you can see, we have less houses than we've had, or we've sold more houses over the last several, well, in June than we had the last couple years prior. And this is the inventory of homes. So June 2 years ago, we had over 10,000 homes on the market, and that's just the single family, and then this is the condos over here. And then last year we had quite a few less, almost, well, over 6,000 less. And then now we were under 2,000 homes, and you can kind of see that here, how many homes were on the market starting in 2013 to now. And now we're like almost off the grid compared to before. Substantially less houses on the market for sale. Now, one of the reasons why nationwide this has been a problem is because since the real estate bubble debacle back in 2000, in the early 2000s, when the big construction companies, a lot of them filed bankruptcy and didn't come back. And so you can see for the longest time, we were not making as many homes as we were prior to that each year. So new construction has not kept up with growth of the country, and therefore we just have less houses all over for people to buy. Now this one up here is nationwide. This is San Diego. Now this one starts in 2005. This one starts in 2001, and you can see where we had blue is the single family homes. This is multifamily units. These are ones that are applied for permits and have gotten going. So we see kind of a very similar trend line as here, where there was more houses, then we had that dip, then now multiple family homes have gone up, but single family homes are really still pretty low compared to what they used to be. Now, I have seen where people are taking advantage of we've seen a lot more multiple units or additional units to an existing home with with California lightening up on restrictions and realizing there's a problem that we need more houses. So we see a lot of ADUs being added to properties. I have two projects, one in La Mesa, one in Claremont, where they're actually adding not just one, but two. So they now have like a triplex, and a great way to make some extra income that goes towards your mortgage. So we're definitely seeing some of that, which will help, again, give us more houses, so there's not such a demand and such a housing shortage. The other contributing, so days on market is one of those things that shows us how active the market is, right? And also if you're a seller or a buyer, if you're a buyer, how long do you have to make an offer? And if you're a seller, how long do you think your house will be on the market before it sells? Well, a couple years ago, we were looking at over a month, and then 2012, you were looking at almost 90 days, 3 months before your house was sold. Now, this, in my opinion, most of this is a marketing and pricing issue as well, but it does show you the activity on the market and the fact that if you do, you don't have time to wait if you're a buyer to put your offers in. You have to be aggressively looking, and if you're a seller, you're not going to have to wait very long, right? I would say this is the median, which is 17 days, which is representative of the whole market. But if you're priced right and you have great marketing, we're putting the houses on the market on Thursday, getting multiple offers all weekend, negotiating the offers on Monday, or I always check and verify how good these offers are. I do my homework on Monday. We negotiate, we go over, decide on the best offers, negotiate, and then go into escrow either Tuesday or Wednesday, depending on scheduling. So really, for the most part, it's even substantially less than the 17 days that you're on the market. And if you're a buyer, we're looking immediately. There's no time to wait for a few days. We're doing video showings so that you can see it, get an idea, and rearrange your plans if need be to get in. So the other contributing factor is that, yes, house prices are higher, but still a lot of people, not everybody, and definitely not the majority, are able to, in San Diego, afford houses because we're still at really low rates. Now, in January, in February we saw an up where it started to go up a little bit, but still I mean, my first house, I think it was 7%, and people were so excited. And the fact that we're under 3 is just amazing. Housing affordability. This is the percentage of households that can buy a median priced home, and right now we're around 27%, and this is for California all over. So better, it's more affordable than the late aughts, right? 2016, 2000, even up to 2008, because the way the interest rates are, even though prices are higher than they used to be, it's still more affordable. However, it's definitely not as affordable, and we're pretty close to only we're less than a third of the people can buy a median priced home. Now, what we are seeing is that people that purchased a home previously are able to sell and upgrade because of the low interest rates, and they get to leverage that equity that they of appreciation. So a lot of the market is not people buying their first home in the median and higher price ranges. It's them buying the second home. And there is a strategy to that to make sure that you get the most out of both that appreciation and aren't paying a premium. So if you are interested in doing that, we have a couple of strategies there to talk to you about. Now, this shows the San Diego County Homeownership Rate. Now, we are definitely, there's been a downward trend, that median line there, and we are substantially lower than we've been. For us, it's even lower than, right, this is 2005 when it was above 60%. Looks like 2007 was our highest, and then it's just been up and down, but on a downward trend. Now, this one shows the median annual income required to purchase the median priced home. We are definitely different depending on where you are looking, and then this one shows how we compare to the rest of the nation as the median. Housing affordability, again, this is just a different way of looking at it. It takes 43%, it's down 20% from even last year. I think that's the biggest here. And that it takes over 2 salaries, it's 2 households to purchase a home, to qualify to purchase a home now. Now, I think this is the other part that we're hearing, is there's definitely forbearances going on, and now we've had the moratorium, so there's still some lender mediated listings. It's still decreased over the last month, or over June, and there was out of all the houses that sold, there was 188 that were distressed sales, and loan forbearances have fallen more than 50% from its peak in June of 2020. Another thing, people are wondering if there's going to be all this inventory coming to the market. Well, I think that there will be some. A few of them won't be able to pay back or get caught up. And the big difference between that and 2008, 2009, all of those, and forward until like 2013, is that while at this price point, they still have equity in their home. So they might have to sell it because they can't make their current payments, their mortgage payments anymore, because they might have less salary. But they are going to be able to sell it and take equity out. So it's not going to be nearly anything like we saw before if these do come to the market. And as you can see, we still need a lot more inventory, so we can absorb quite a few homes to sell in order to kind of correct our market. Now, I guess I did take out the one slide that just shows that we have less than, we did it for the July update, is there's just less houses on the market. We have less than 1 month of inventory on the market, when a buyer's market, well, a balanced market is like 5 to 7 months. So we could have lots more houses on the market and still not be a buyer's market. So consumer confidence, I think with this restraint, with the Delta variant and people having, are we masking or not masking? I know lots of people aren't doing as many social activities anymore. When we thought we were kind of freed up, this second round seems to have brought consumer confidence down a bit. So I'm interested to see how that plays out towards the end of the year and what's going on with that and how that plays out in our market. But as of right now, that might be a little bit of why we're seeing the slump in the sales right now, because that is where we're at. Now, contributing, just recapping, no inventory, both because houses are getting picked up almost as soon as they're listed, and they're, everybody's like, well, people are leaving California. Why is there's still so many buyers? And well, people are adjusting and removing. California still has an increase of population every year. It's just smaller than it used to be. So we are not negative people. We are positive in, there's people leaving, but there's an equal, more people moving in. And then also, since people were able to move, we saw people moving from the Bay Area, which is twice as much to live, and moving down here where our weather's better. So we did see some of that too. And then construction prices are high, right? With, I think a lot of us have heard about wood being 300 times more than it was just a year ago. I have, and it's not just wood, there's a shortage of everything. I have clients that were building, and they purchased their appliances, and there was such a shortage that somebody accidentally sold their appliances to another client, and they had to wait 3 times as long to get those new ones in. So there's shortages everywhere in supplies, so that too is also making buying a house a premium. Currently it's cheaper to buy an existing house than to build it. Lots of buyers with more interest rates, and then, like I said, people are moving. They have more choices. They want to move out of the condo and have some space. Or they're moving from Northern California to here. So we're seeing that as well. So what does that mean for you? If you're a buyer, we kind of talked about this before, you have to have your ducks in a row. We have to have a strategy. We are, we're looking on the market immediately. Thursdays are the big day, but we're looking daily at the market to see what's new and getting you in there quickly so you can place your offer. We're placing strong offers, aggressive offers, and really putting your bottom line down first. Sellers, you're selling quickly. Buyers are not as picky. They're willing to overlook some of the things they would normally really like to have repaired or credited. So there's a lot more flexibility. They will let you stay in your house longer why you're finding a house. And so there's quite a few benefits to being a seller right now. It's definitely your market even now. Now, homeowners, if you have no intention of selling, it's still really nice to know that you have so much equity, right? Our homes are usually one of the biggest, if not the biggest, portion of our net worth, and the fact that our equity increased, and also gives you some movability. Like, you can take some of that equity and add the ADU unit so that you're having help paying off your mortgage. You can, I don't suggest that you go on vacation with it or anything like that. Leave it in there for the most part, but if you can use it wisely and invest it, depending on what your income is and all of that, that might be a good thing. You can also, if you have not refinanced, let me know. It could be a big benefit for you on a monthly savings to, depending on where you're at, either go down to a 15-year loan at that interest rate, lock it in, and have great monthly payments and shorten the life of your loan. So, lots of options. As always, I am here to discuss the details. You can put them in the comments. This is my first big mid-year update, so let me know if I should add things or what you appreciated. That's always appreciated. Subscribe if you want some more like this. We'll be doing monthly updates as well, so they're not quite as long. And hopefully I'll get better at saying So thank you if you stayed through the whole 30 minutes. I really appreciate your dedication and willingness to be here. And definitely like and subscribe. Thank you very much. Have a great rest of your 2021.